Good morning, good morning, good morning. How you doing, Busy Yami? Alrighty, so looking at the market here, we did take sell side, took this 4 hour sell side. Notice how we failed to displace. We do have some relative equal highs up here, so I am mainly focused on buying the dip here. We do have data at 9:45 and data at 10 o'clock today. So today could be pretty volatile. Well, it might not be. There is quad witching, so really not looking to be too greedy today whatsoever. We did just get the hourly equilibrium block retest. Sadly, damn, came back just a little bit too late. All right. So with that being said, we're likely going to get this push up. We have these relative equal highs here first and foremost. If we fail to displace past these, then likely we will see a pullback, potentially even back to this fair value gap range before we get continuation back up. Um, Buy side liquidity up here. We got these relative equal highs. Let me stay on the hourly for a second. All right, so we got hourly slash 4 hour relative equal highs here. How's everybody's week going? Should have been a pretty good week, especially with yesterday. From what was that, Monday the 17th? Oh, what just happened? All right, cool. Yeah, from Monday to Thursday, kind of gave you a lot of expansion, a lot of opportunities. We expanded tremendously on Monday, then we pretty much gave back all the profits from the market, pretty much from that expansion range yesterday. So you had a lot of opportunities to make some good money. Today, mainly looking to target these relative equal highs, then get this push up into the 4 hour equilibrium block here, or not 4 hour equilibrium, 4 hour fair value gap range. And then from there, we'll pretty much reassess what the market wants to do. If we can get this up close candle close back above 20,073, we likely will be bullish for the remainder of the day. I think there is some divergence between ES and NQ. All right, so ES made the higher high, NQ made the lower low here. So there is a little bit of divergence. That means ES is a bit stronger right now. But personally, I still will just be trading NQ here. We did just get the retest back into the 15-minute IFEG here, and likely we're about to get the expansion at least back up to daily open, which is about 30 points. So pretty good trade setup. We just got to get a good entry here now. Let's get these levels posted. All right. So pretty much the levels we have this 4 hour slash daily sell side liquidity, pretty much low of the day here at 19,947, relative equal highs here at 20,079, and then internal buy side liquidity at 20,241. So if we can't actually get this expansion and the displacement above the relative equal highs here, we will see a lot more upside. If we fail to, very much likely we'll end up just chopping, mainly because of quad witching. So that is something to keep in mind today. Not looking to be too greedy, really going to take some scalps here. Get a good A plus setup, take them long, take them short, whatever the market wants to give us, and let's have a great day. And then as well, we are sitting on the daily optimal trade entry, also paired with the daily fair value gap, so that is something to consider as well. Getting levels posted now for today's session. Good morning, good morning. How you doing, Andrew? Yes, sir, Paul. We're gonna have a great day, man. Looking target. We're gonna look to target midnight open, then the relative equal highs here. I mean, I see something coming off the daily time frame, so that's the main reason why I kind of want to see some upside here. I just want to see the price action support it. Love to hear that, Andrew. Patience pays. My journey of listening starts today. Yes, sir. Yeah, I mean, we had this buy side liquidity that we got this push up to. Did we actually take it? No, we still haven't taken it. No, did we? Check. No, we haven't taken this buy side just yet. And then also, whenever you see price pretty much come this close to taking buy side and never did, ultimately price is gonna get this push up here to 20,044. It tried it at 705, ultimately got the rejection off the volume imbalance, and then we saw the push down. So now we just need to find a dip, and I kind of do see a dip here on the 10-minute time frame. Kind of want to see if it pushes back into this IFEG here, and we end up taking these longs here. Really just want to see a push down to about 27.75 here. It's about a 3 risk to reward. And honestly, if this trade does work out, we probably might call it a day pretty damn early here. Just want to see this pullback. Market open in 5 minutes, so we could get the pullback in the next 5 minutes. Delete these optimal trade entry. Really don't like Fibonacci's on the charts. All right, cool. Where's trade evade? All right. I really don't have the best of entry here. Where is this at 31? All right, well, we're in some longs here. I have a pretty bad fill. Fill's at 31. Ideally should have gotten our fill here at 28, but kind of wasn't paying attention. Looking to target this high up here. I'll end up adding once we get the pullback if it comes. $27. Get a little lower. Let's go look at another time frame. Where's our 2 minute? 2 minute did just offer a change of state and delivery here, but we are holding the 5 minutes, so we'll see how this works out. We are respecting a 10-minute equilibrium block as long as this 10-minute body pretty much holds here. And then as well, we do need to see price hold up 26 here. No ifs, ands, or buts. Like absolutely price has to hold up 26. And we definitely don't want to create an IFEG here because if we do, we are going to likely get stopped out. Pretty tight stop loss. Stop loss here at 22. And then as well, we do need to see a close back over 36. And currently, did we take buy side? No, we didn't. Yeah, we need to see a close back over 37 here. Market open here in 3 minutes. Price absolutely cannot create that IFEG. If it does, this trade won't work out. Need to see a close over this high here. So we're about to go hit our PT. So far, you're up 600 and PT hit, and we're done. A quick $600 day in a matter of 2 minutes. Patience pays. All right. Well, we're done before market opens. If you want to keep trading, you easily can. Let me see. Where is this? Nice 3 to 3 R trade to start off the day. And that's why you also got to trim, because if you don't trim, guess what happens? See what greed does? Now you're back to your entry. But very much likely we probably will still see the expansion back up. Actually, come to think about it, I do gotta go ahead and pass some Apex accounts, so I will go ahead and open that up and let's go ahead and get that funded today. And pretty much that's how you use IFVGs, also paired with equilibrium blocks. Like that was a A+ setup that just happened in a matter of a 2-minute candle. Market open here in 1 minute. And as well, we said before the day started, it is quad witching. So with that being said, really not looking to be too greedy today. Ultimately done with our live account. And now we're just going to go ahead and pass these top step accounts really quick, or not top step, Apex accounts. And let's call that a day. Then also take a look at some options. I do like options a lot. I like Amazon specifically. The crazy thing is our 187 calls really just came back to life. Where's my phone? All right, Amazon calls back to life here. I can move faster than this. All right, so pretty much what just happened on NQ, we took the relative equal highs and now we're displacing back down. Give me 1 second, need to look at options real quick and handle this. Amazon, likely we see continuation up. Just close these Amazon calls at 1.1. That is insane. I mean, we probably could even come back to break even on these. Jay, I will answer your question in 1 second. Cool, 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 cool. All right. How do you deal with the situation when the pivot point is directly on the wrong side of the equilibrium block? Is it the low or the high, somewhat protected? So you will notice sometimes, okay, so pretty much we just formed the bearish equilibrium block, got our change of state and delivery here. But I pretty much like to, are you talking about the entry? What do you mean by which pivot point? Because almost every candle kind of offers a pivot point if you're looking at a lower time frame. So like a good example here. Uh, okay, so for your entry, there's a couple of different things to do. Pretty much, you kind of don't want to see a body close mainly below the range. So like, let's just say this one for an example at yesterday's close. I'll just expand this chart here for a second. All right. So if we come here, look at this expansion, we ended up taking some QQQ calls off of this pretty much equilibrium block, and also the fact is kind of knew a short squeeze was going to happen just based off of the lower time frames. But if you look here, notice how we have the equilibrium block range on the 10-minute time frame. What did price ultimately do? We got our expansion back down into this range. We ended up looking to target these highs up here. Actually, it was just this wick up here. And we ended up taking it out once market actually opened back up at 6 o'clock here. So ideally what I like to do is put your stop loss at the bottom of the wick of the equilibrium block and then find out where's your drawn liquidity. Well, we have our drawn liquidity right here, right? And the main reason why as well, I kind of just like to use this wick because even if you get stopped out, you can honestly just look back at the lower time frames and see what price is doing. So if we were to come back to, let's say, the 2-minute time frame to the same exact range, let's just say you did get stopped out here yesterday, or we might have to look at the 1 minute. Yep, the 1 minute is a perfect example. So the equilibrium block actually formed right here. Um, Formed out here in this range. Then you got your breakout. Notice here on the 1 minute time frame. Let's just say for this example, this wick ended up stopping you out, right? Well, look here. Look at the, what is this, 338 candle. Notice how this body also forms an equilibrium block. Then we get the body close at 340. What does that mean? That's a change of state and delivery, right? So ultimately now you see the price action, support bullish price action now, which means, hey, we're going to get this push up. We're going to get this push up to our buy side liquidity. So you kind of want to use multiple time frames as confluence. And then as well, when you're using like, let's say, good example, like a 30-minute equilibrium block, I tend to not really just enter off the 30-minute equilibrium block. I'll wait till price starts to support that price action on the lower time frame, and then I'll take the trade rather than just jumping in on an entry. Yes, this is a good entry because we understand the risk to reward here. The risk to reward is a 3.02. But if you end up waiting for price to actually come back in this range and then kind of support the lower side, and then you see the change of state and delivery here, now you got a much even better entry here. Now you just went from a 3 risk to reward to a 4. And then you also understand that, hey, chances are price will never come back to this range. It's going to take buy side liquidity before it actually comes back to take out your sell side. Does that make sense? Yes, no, maybe so. And then as well, this weekend, I will be having this video edited for Equilibrium Block Part 2. Equilibrium blocks are very damn powerful because even if this doesn't hold, what's going to happen? You're going to see a retest. So a great example earlier this morning, if you go look at the 30-minute time frame, we had a 30-minute equilibrium block that price did not support when we got our expansion up. So if you look here, we got our expansion up. Let's say you try to go long because you wanted this buy side liquidity to get taken out, but NQ ultimately never did. It came 2 points away and then shot back down. So anytime you see that, that means NQ is likely going to come push out and take out sell side liquidity. So with that being said, let's just say you get stopped out. It doesn't matter. We can even use the example we took yesterday. So let's say you get stopped out. What's gonna happen? Like 95% of the time, I kid you not, like literally 95% of the time, it's gonna give you a retest even if you get stopped out. Really just depends on the body close. Like as long as we close somewhere near this range, you're gonna get a retest on the following candle. And then if you take the same exact trade setup, this is why I keep saying if you have an effective edge, keep pulling. Don't be afraid just because you took a stop loss. So let's say you did want to go long, right? You see body close below it, you understand, hey, I'm stopped out. It's perfectly fine. What did the market do? Didn't it just give you another 2-to-1 risk to reward ratio to take out this 30-minute sell side liquidity? So that's like the big thing. That's why I love equilibrium blocks and probably like one of my favorite setups. That and pretty much IFVGs now. Because even if you get stopped out, you literally more than likely you will get another entry to take this down to the opposing liquidity. And I'll go more in depth into the YouTube video, so stay tuned for that. But looking at this right now, we did just get a change of state and delivery here in a 15-minute time frame. We're closing back down below this range. 5 minutes left in this candle. Ultimately, if this fair value gap does not hold, we will likely come back down and take out this daily sell side and potentially even come to take out this other daily sell side here. We tested the relative equal highs, saw absolutely no displacement whatsoever. With that being said, means the market's going to seek opposing liquidity before we kind of see if the market wants to expand back up potentially and go take out the relative equal highs for the third time. Or do we continue back down a daily sell side? So really just want to see if this 15-minute fair value gap supports price or not. And then as well, I'll even leave this up. You guys kind of saw exactly why I took this long here. Ended up working out in our favor. Price came back to the IFVG, respected it perfectly, took out buy side, and then instantly dumped. So equilibrium blocks and IFVGs are pretty much like my favorite setup. They work out majority of the time. Probably like 85, 90% of the time. And looking at the lower price action, this thing does not really look the greatest to trade, but we'll see if we can find a setup. And even then right here, notice how you got your retest, and then you just took out sell side liquidity as well. Now based on a 2-minute time frame, pretty much if this volume imbalance does still hold, we could get a push back up here to this buy side liquidity at 28. It's about a 20-point move up. And we're also respecting the 15-minute fair value gap, also paired with the BPR or IFVG, whatever you want to call it, because they're both basically the same thing. Go look at ES. ES actually did take out sell side, so I wouldn't be surprised if NQ actually does make the higher low here. It's definitely possible. Yep, so if you look here, notice how ES took out the sell side, NQ has not just yet. It's all going to be dependent on this last 3 minutes here, this 15-minute candle. We do have data also coming out here in 5 minutes, 4 minutes. Gonna be pretty patient here. Kind of just want to wait for data to come out. Might even wait till 10 o'clock data to come out too. But we still have those relative equal highs. That's a very strong magnet to price. So wouldn't be surprised for us to get a push up. I just want to see a actual change state and delivery and an entry model to present itself. So whether we get an IFVG entry model or equilibrium block, whichever one comes first, then we'll pretty much look to target these highs again. So far, price based on the 15-minute is still supporting this IFVG here. We really just need to see a close back above 02 here based on the 15-minute time frame. 2 minutes left in this candle. Um, hmm. Amazon 190 calls? No, that's too far out the money. What's AMD doing? AMD could offer a really big expansion move, kind of to both sides. Because if we break the call trigger, we end up pushing over this trend line, and we 100% likely will go take out this wick from yesterday. If we break below the put trigger, we're gonna go target the gap fill. So either or is gonna offer a pretty great setup. Just gotta wait for the actual confirmation here. Meta rejected the call trigger. Google gapped up over our call trigger, and Google is gone. Google is actually really strong right now. Really like Google for a swing trade more than anything. We came off the optimal trade entry, and now looks like we're about to get this expansion back up to all-time highs here. That's really insane that this thing really came back to life. I love Amazon. Thank you, Jeff Bezos. All right. Um, Let me look at Google swings. Could this go to 180 before close today? It's definitely possible, but that almost seems too much like a lotto, to be honest. Starting a position here in Google swings. Where's all-time highs? Oh, 180 is all-time highs. Okay. All right, so we're just gonna go ahead and do 180 calls here for Google. Just got filled here at 3.85 on some July 19th Google calls. What, back down to the daily sell side down here? 904. Currently we're not trading anything right now. We took a long here, made our money. You might have just been a little too late. We took a long here pretty much out the gate, took out the relative equal highs, and now it looks like we're getting a push down. Let's see, the 5-minute IFEG you said? Oh, I see it. Damn, sniper entry, bro. Great trade. I see it. And that's why I love IFEGs as well. They are very, very powerful, like extremely powerful. 719 actually. 6. Um, Great trade, Andrew. Oh my goodness. Sniper trade. Yep, so if you look at the 15-minute, we also just created IFEG on the 15-minute as well, back down. So yeah, we're definitely coming here to take out the low of the day. Kind of like we talked about, if we fail to displace relative equal highs, I suggest you guys like write that in your notes. That's like a very powerful tip right there. If you don't see displacement past relative equal highs, you will see a pushback down to opposing liquidity. It's like no ifs, ands, or buts around that. And that just comes from experience of me being in the market for 5 years and watching the market for 5 years straight. All right, so we took out the internal sell side here in the 15-minute time frame. Data coming out here at 10 o'clock. Um, 5 minute gave you that entry model. You also got a 5 minute equilibrium block here at 17. Are some failure swing model timeframes more powerful than others? So essentially, if you have an edge, it doesn't matter what time frame you're trading on, like none whatsoever. To the point to where, let's go look right here. The same long that I just took this morning to go target these highs, that came off of this 2 minute IFVG that just got supported. And I wasn't greedy. It was a 3-to-1 risk to reward trade. You take that 100% of the time. Ended up targeting our buy side. Look at it. It was off the 2 minute time frame. Still ended up working out. And then the same trade that Andrew just took off the 5 minute time frame, same IFEG model, except to the downside now. Now we're going to take out pretty much low of the day here. Same exact model. If we can go to a 4-hour time frame, we can see the same exact model end up working out. We can go here to the hourly yesterday, right? Okay, so pretty much you have another IFEG setup right here off the hourly setup. What does price do? Come back, give you your entry off this IFEG, give us our push down. You could have taken out the sell side here, and you could have been done. Or, shit, you might have, yeah. Here's a cleaner model. Here's a little bit of a better model. And the only reason why I'm saying that is because these bodies really don't close below the range just yet for you to have 100% confirmation. If you're using confluence from like the lower time frames, then yeah, you have cleaner bias. But if you were just only trading off the hourly time frame, chances are you would have had to wait to the body close. But this one's a really perfect example. So if you come here, if we're still supporting bullish price action, we would have gotten that close above. Notice what happened. You got the body close below it. What did the following candle do at 10 o'clock? Didn't it give you the retest? It gave you perfectly the retest, and then back down we go. Is NQ futures? Yes, sir. NQ is futures. Right now, we're in some Google swings, looking to target all-time highs here. Besides that, nothing's else really worth it to take anything for Lotto Friday. Maybe if AMD does trigger, or we're triggering right now, actually, as we speak. All right, I'll take these. Ideally, I would like a pullback, but we'll see. Pullback probably wouldn't come. Um, this is chasing price, and I truly don't like to chase price whatsoever. I'll wait. I'll give it some time. Maybe data pushes us up at 10 o'clock and we get a pullback entry for AMD puts. But for now, personally, I would not chase price. It just isn't worth it. But we do have this gap fill down at 155, so the best setup, you could either take 157.5 puts or even 155 puts. Both of those should work out as long as NQ does go for daily sell side here. And when it comes to options trading, you kind of don't really want to be buying once price is displaced for 1, 2, 3, 4 candles. Andrew, other Andrew, how you doing? I know. Um, I assume the higher time frames are always going to be more significant no matter what you're trading, just because the higher time frames are going to now equal higher time frame draw on liquidity. And here we go to daily sell side here. And based on this hourly right now, we are going to get a change of state and delivery back bearish again. We took buy side and instantly got the rejection. Also, if you look at this fair value gap, notice how we got the rejection off of this as well. Andrew, what was your PT on these on the shorts here? Damn, that was a really great trade. All right, Andrew, I'll talk to you in a bit. Do you trade gold? So personally, I used to trade gold. Like my 3 months in my forex career, and then started trading silver. I honestly prefer silver way over gold. Silver just has cleaner price action to me. Gold is very good for 830 trades. Like if you're trading data, then for sure I'd say gold is amazing. But gold on futures just really isn't worth it to me. Gold or silver I think just has much better price action. So like a good example, if we go look at silver now, silver is probably still running pretty aggressively. Oh, we got a pullback here. All right, so gold also has a massive pullback right now. All right, so we go take a look at silver. Silver respects Fibonacci's like perfect, like really perfect. Is the last 4 hour liquidity graph relevant? Yes. You're talking about from the highs here? That is very relevant. The fact is that we failed to displace past these is signaling why we're going down here. Okay, makes sense. So I'm guessing you're holding runners here for this daily sell side to get swept at 904 or whatever remaining contracts you have. I'm so gutted today, brother. I went on tilt and almost blew my funded account. You gotta take it slow, man. And if you ever do notice tilt, like literally the best thing to do is just go on a walk. Go on a walk, go hit the gym, do something, get away from the charts. Like honestly, do not watch the charts. I did the same thing before. We've all been in your shoes. It's a-okay. Just no point in continuously trading. Because if you are trading in like a negative headspace, it's like a 90% chance it's probably not gonna turn out well. Just being honest. Now, if you have enough experience under your belt, it shouldn't really affect you just because you focus on the process only. But to newer traders that don't have as much experience, the best thing to do would literally just go on a walk. Go on a walk, maybe come back a couple hours later, look at the markets again, see if you can take another setup, and only take a setup. Don't try to like take every single trade you see. If it's not a clean setup, it's not worth the trade. And like every single trade I take, I can literally tell you. I literally post it in the community and tell you, hey, this is why I entered. This is why I'm long. This is why I'm short. So if you can't do the same, it's not worth taking the trade, especially not when you're tilted. Your videos on fibs is pure gold. Uh, this is why this is my first live stream with you. I can't believe I couldn't control myself. So gutted, but thanks for answering my question. God bless you. God bless you as well, brother. Why is this not moving? At the low. Okay, so the liquidity sweep at the low here from once we started the day here. Yes, that's also important because that's why we got our pushback up here. And then you can also see it created some divergence between ES and NQ. So if we come back here to the 4 hour time frame, look at the 4 hour on ES and then look at the 4 hour on NQ. Pull those up side by side. Oh, this is silver. Where's NQ? Here we go. All right. So if you look at this, what did we do here on this liquidity sweep? Let's honestly go back into replay mode. All right, so with that liquidity sweep right here, notice the divergence between the two. And let's also go back on this side as well before market open. Okay. So ES did not sweep the low. So what does that create right there? That's divergence already, right? What did NQ do? NQ did sweep that low, right? So therefore, you have your liquidity sweep. What does that likely mean? Now price wants to go look or seek for opposing liquidity before we pretty much see another move. And that's exactly what happened here. So you got your SMT right here, higher low, lower low with the liquidity sweep. What did we do once price did sweep that liquidity? We came up, took out pretty much the buy side up top here, and then instantly dumped off of that. My executive funded account too. I'll stay and learn from a true master. Yes, sir. It's just about patience, man. The biggest thing is like finding the A plus setups, and that's what I kind of talk about. It's like you want to take setups where you know the market's gonna go, and if you trade pretty much ICT concepts, smart money concepts, you know where the market's going. You honestly do, because at the end of the day, once the trade actually occurs, an hour later, you can look back and be like, "Oh wow, we rejected the fair value gap and then shot back down, or created an IFVG and shot back down." So it's like you see it, but it's just a matter of you in the right headspace to actually take the trade. You took some off at 19,950. Makes sense. So is this the order block that we're coming from right now? Ah, I see. I see. I see. I see. All right, so we retested here into this fair value gap range on the 12-hour. We're respecting this 4-hour equilibrium block as well currently. Retested the IFVG also in the 4-hour time frame. And we failed to actually get a body close below the most recent candle low. So it makes sense why we are getting this push up. But honestly, with it being quad witching, still not looking to be too greedy. Maybe if we create this IFVG here, we'll get a setup here. And even then, I'm literally probably just going to take this up to 20,010 or maybe 20,029. So far, 5-minute is respecting the bearish fair value gap range. 2-minute is trying to create an IFVG. We'll see if it actually forms here. 2-minute also, you do have this equilibrium block that just formed. So we do have a decent setup here actually. And then this is kind of like one of my favorite models. Equilibrium block paired with the volume imbalance. When you see the two, especially on ES, it works out a lot more effective on ES than it does on NQ. But when you have those two things lined up, pretty much price likes to support them very strong, and then you get your pushback up to whatever internal buy side liquidity or buy side you're targeting. All right, so the one setup I will take if we actually can get this close here is, and the retest. Pretty much I'd want to go long off of 9,380 or 9,038, and then look to take it back up to this wick. That's if we shoot back down here. And that's also paired with your 2-minute IFEG here as well. And how many contracts do we need? 11. All right, if we get this pullback here, we'll be taking, what, 10 contracts? 10 contracts here would be a $2,000 stop loss. Go up to 3. That would be about a $6,000 trade. All right, yeah. So whenever we get this pullback here, looking to just go ahead and get this Apex account funded here, pretty much with this one setup. Just want to see a pullback to the equilibrium block. And then we look to take out this internal buy side up top. So far, fair value gap is not being respected. I'd kind of really want to see the IFEG confirmed and close over on a 5-minute time frame. Where's price coming from? Where are we rejecting? Fair value gap range on a 5-minute. What's the hourly doing? Hourly is still severely bearish. And we got to change the state in delivery as well. 38, take this up to 78, about a 30-point move up, 40-point move up. All right, so based on the 5-minute, we're currently respecting the bearish fair value gap. We'd need to see a close above that to actually see that we get a slight bit of retracement here. We did take out the low of the day here. Haven't displaced just yet. The only entry that I think is actually fairly worth it would be if we come back to the 2-minute equilibrium block, take this back up, and only then it's still only a scalp, like not looking to be greedy whatsoever. But ideally on the 5-minute, I would want to see a close over this fair value gap. That would make it a kind of an A+ setup if we did get this close here. Um, 2 minutes, kind of still respecting the IFEG here. Let's see if we get this pullback. Entry would be around 38 here, and only looking to scalp this. Do we have any divergence right now between ES and NQ? NQ did not take this most recent liquidity sweep. All right, so there is absolutely no divergence between the two right now. We did retest the 2-minute IFEG, but personally I'd want the equilibrium block retest. It's the only one that I think is actually worth the risk down here. Yeah, it's only a 2 risk reward. We'll see. 2 minutes left in this 5-minute candle. Oh, data already came out as well. And then is that all the data for today? Yep, that's all of data. Okay. So we're done with data for today. Wouldn't be surprised if the market actually starts to dry up here on price action. There is quad witching, and when there is quad witching, price tends to really just chop around. AMD having a pullback. Let's see if we actually get the alert this time. Two-minute, just offer to change the state delivery back bullish again. Could see a push up here back to about 20,009. That only occurs if the 5-minute can actually get a body close over that fair value gap. Let's see, is anything else worth it on common stocks? For my options traders, you guys trade anything today for options? Any A plus setups? Yeah, this thing is just ugly. Besides Google. Arm with the gap fill play. We could take this up to 160. I do not trade Forex. I gave it a go. I gave it a go like a year and a half ago. And then kind of realized I was just spreading myself too thin because honestly, I started off with just common stocks and then transitioned into options. And then when you're trading options, Forex, and futures, yeah, there's no way you can actually focus on the market. You're spreading yourself too thin. Like trading options and futures is pretty easy for me just because I've only traded SPX for like 2, almost 3 years now. So yeah, you're basically trading the same chart. And then options as well. I came from options, so with that being said, it's kind of like engraved in me. But then once you add Forex and start looking at currency pairs and things of that nature, yeah, that's where things get a little bit too much on your plate. All right, so what's ES doing? ES still supporting nothing but bullish price action. NQ, like we talked about earlier, the only entry I'd want to take is down here off this 2 minute. CVX and ZOM. Funniest thing, I had COP on the watch list yesterday, but never actually posted it. Where is this? What did it do? And we're gone. Oh wow. Oh wow. Okay. So COP was a great trade. ZOM. Okay, yeah, XLE is actually really strong right now. Personally, for Lotto Friday, for me to take this trade, XOP already or ZOM already took buy side liquidity. Same thing with CVX. Next PT for CVX 158, 158.20. This is called the power of three. Um, yeah, this is called the power of three. So I have the daily power of three and then the hourly power of three. And to change the time frame, you just click it right here on the settings. And based on the 5 minute, we're still struggling to get this close over this fair value gap range. Price action is already starting to slow up. Like if you caught the downside, great trade. If you caught the long with us, great trade as well. Everything else, only entry that I still say is worth it is down here for the long for me personally. I think it's by Todd. What? Todd something. Tude, not Todd. 2 degrees. That's his name. 2 degrees. And then he also has a pro version. The pro version I think gives you like multiple candles. So yeah, now we're getting this expansion off the IFEG. We're likely gonna come take out this internal buy side up top here at 09. If we get a pullback, great. If not, I'm a-okay with that. Made what, 575 here off this long here with just taking 2 contracts. I am perfectly fine with that and calling that a day. We are getting the retest of the change of state and delivery equilibrium block here on the hourly time frame. And very much likely so. Just would have to see how this 5 minute reacts. And we could even get this pushback up to the relative equal highs. The way Google's moving, we might end up in the money before close. Google calls up 11%. Um, Personally, no. The only macro time that I use, and it's just because I discovered it from just me watching the markets, was at 350 algo. That's why I like to trade power hour, like the last 10 minutes of the market, just because you can literally buy a SPX contract for $100 and literally take it up to 600 in a matter of a 3 minute candle. Oh, I trade every day, boss man. I don't believe in that. I think that's a limiting belief if you ask me. That don't trade Monday. Now that's a complete limiting belief. Monday we had a pretty damn great day to be honest. So I don't believe in that whatsoever. And here we go. We're about to go take out this buy side. No pullback to our entry that we wanted. You could have taken it off the IFEG if you did want to. But ultimately never got the pullback that I wanted to this 2 minute equilibrium block, but we're about to go take out the internal buy side liquidity here. If we can get a close above 20, likely we see more continuation to the upside. Only other entry model that I would take off of this range would be if we get the retest of the 5 minute IFEG that just formed. And then look to take this up to the relative equal highs. And that would be another 70-point move up. Around 970. Huh? There are three 15-minute equilibrium blocks around 970. I'm looking at 970. No equilibrium block formed, but we did get to change the state in delivery once we closed over this volume imbalance. I do see that much. Or did you mean a 3 minute? Nope, nothing on 3 minute either. How you doing, Andrew? Andrew, are you in Cali? Thinking about to be out there for the 4th of July. What's the time frames you use for equilibrium block? I'm not sure since I'm new to this concept. The lower time frame equilibrium blocks sometimes don't hold when over. Yep, and that's absolutely true. That's a fact. So whenever you are trading the lower time frames, just remember the lower time frames really it's not as powerful because it is the lower time frame, and especially if you're going against the trend. So like if you're going counter trend, so let's just say okay, we can use a great example from yesterday. Well, no. Yesterday really has no good examples. We might. Okay, we can use this one off the 10-minute time frame. So if you come here at 10:40, this So lower time frame ones, it just depends on what they kind of look like as well. So I will be going into that video this weekend to kind of explain it. Here we go. So if you look at the 10-minute equilibrium block here, ultimately, what is trend doing? What's the current drawn liquidity? Well, at this given point in time, buyers did step in here. What was this? I think off of discount range, or no, after we swept liquidity. So buyers swept liquidity here. What do we see? We see this 10-minute equilibrium block. Ultimately, it didn't hold it. They didn't support it whatsoever. And the reason for that, well, what was the drawn liquidity? The drawn liquidity yesterday was coming back into discount range, which was somewhere around here before I deleted the Fibonacci levels. Take this. Here you go. All right. So here's a great example. Why this 10-minute equilibrium block did not hold, but it also still gave you an entry to take it back short. So it's kind of up to you, kind of being focused on the process here. Didn't hold. It also gave you an IFVG entry as well on top of that. So you got a number of confluences that are kind of saying, hey, price is not supporting bullish price action whatsoever. So what does that ultimately mean? Find where the next drawn liquidity is. And ultimately we came back down to this discount range. So you could have easily taken this down 100 points. I'll be here for the July. Where are you going? I'll let you know exactly right now. Wow, Amazon is pushing. Google is pushing. Google is gone. Santa Ana. How far is that from you? Not committed to keep my server alive. Need a new partner. My current partner capped out. Let's hop on a call, brother. Funniest thing, I was thinking about creating before I named it Rags to Riches, I was thinking about naming it Olympus Trading just because it fits. And I guess everybody else that has the name Zeus also probably thought about Olympus because it makes sense. I'll be free in the next hour if that works for you. So let's go see what entry model this thing wants to give us. We do have the 10-minute IFEG that just formed, and then we also have the 5-minute as well. I still ideally would like this pullback all the way back down to this range. What's discount? Is this back in discount? This is not in discount range. We'll see. We might actually get the pullback that we want. It's possible. I might be done streaming honestly by then, so just give me a call. I got your number. Or I'll send you a Discord message right now with my number again. Oh, the Google trade is for all-time highs. My apologies. Kind of just been locked in with the stream. Um, Google, we're taking this to all-time highs, and Google is headed there. And that's the main reason why I took the 180 calls, so that we can trim profits once we hit all-time highs. And then if we want to keep going, cool. If we don't, also cool. Doesn't affect us whatsoever. And that's another very important thing once you're trading options. You kind of just want to have your PT, and if it keeps going past PT1, that's great. If it doesn't, that shouldn't affect you either, because you should have trimmed off at least a good chunk of your position and let the runners run. should go to a higher time frame chart, not this. All right. And then I also posted Google in the watch list just yesterday. So that's also another main reason why we got in it today. JJ, you can get the Cybertruck? What's retail for it? Is retail, what is retail, like 100K for it? Um, so equilibrium blocks form mostly during displacements. Yes, to a certain extent. Um, so if you come here, okay, we just tested discount range. So for an example, here, we can use this kind of this model here. It's not, I'll find a cleaner one. And price does not look like we're supporting bullish price action anymore. Okay, here's a great example. It doesn't give you a retest entry, but ultimately what happened here, we get our push up and then it's more so formed off of retracement and then the displacement candle. So it'd be kind of consolidation and expansion. That's mainly where equilibrium blocks form from. So we get our expansion up, we get our retracement slash consolidation, and then we get our expansion leg back up. But that was going back into all-time highs, so let's find something back from maybe over here. We can go. All right, so we're also holding out this daily volume imbalance. Oh, all these levels are from the contract change, so they're kind of ineffective. Good example here. Actually, there's one on the weekly that's really perfect. All right, so if we come look at this here, if you're looking at this weekly time frame, we have our bullish equilibrium block that ultimately formed. We got our expansion leg up, we got our one retracement week, and then we got our expansion up again. What did price do once we came back into this range again? Notice how buyer stepped in and then took us back up to all-time highs at that time, back in March. Took out the liquidity, and then ultimately we got our displacement back down, went to go seek some form of internal liquidity slash imbalance. And then there was also a lot of divergence between ES and NQ right here once we got the retest back in April. And then ever since then, we've just gotten non-stop expansion since. Would you still take the 2 minute? Let me go see what price action is looking like. Yeah, I'll still take this 2 minute just because it is back in discount range. But like I said, it still is a scalp. Very low risk, high reward. Because if buyers actually do step in down here and we see some type of divergence, so we would have to see pretty much like ES potentially make a lower low and then NQ make the higher low off this equilibrium block. That would pretty much equal like almost an A plus setup, and very much likely at that point we'll probably more than likely come up to take out these relative equal highs again. Basically what I'm asking, doesn't the 1 hour retest, so to an extent the higher time frame is always right. And what do I mean by that? Let's say you see two equilibrium blocks. Let's say you see an hourly equilibrium block and then you see a 5 minute equilibrium block, just like we're getting the rejection here. Do we have a 5 minute that formed? Let's see. Okay, so we don't have a 5 minute that formed, but ultimately you're absolutely correct. It would trump that. The only way this trade will work out is if ES does come down here and take out sell side to give us more room to actually run. And the fact is that NQ is kind of the weaker one. Trade setup model probably wouldn't work out as much. 100K foundation series. I like it. I like it. Bro, I've seen the all blacked out one and it was just like, damn. It's kind of worth it. It's kind of worth it. But me personally, I just don't like the fact is of I'm not really too interested in EVs. I don't like the concept that, hey, you got to go stop at a supercharger, and if there isn't a supercharger near you, well, you're going to be sitting in your car for about a good hour before you actually get a move again. And then also, I don't know if you live in a place that's cold, but once it's cold, it's like, and it freezes, you know, you got to wait before you can actually start charging your car again. Because I had a friend that lives in Chicago, and when it was like wintertime, he literally couldn't move until his car like defrosted or unthawed to where he can actually put it in a charger port. SMCI to recover more downside. Let's go take a look. Where's SMCI at? And that's why you got to trim at your PTs, man. We took this, what, last week Monday? Last week Monday, took this up to 970. Hit all of our PTs in a matter of a week. Kind of regret taking so much time on those, but it is what it is. We did just take out the sell side here. We back in discount range. I mean, that's smart, bro. If you're gonna do that, I'd say 100%. Because I've seen people charge crazy prices. People are charging these like Lambo prices. And it's like, bro, nobody's paying 200,000 for a freaking Cybertruck. That's not worth it to me whatsoever. I get the hype around it, but yeah, it's just not worth it. Okay, so yeah, you're in a place that's cold. Yeah, I personally don't think that's worth it. I did see the Lucid Airs though. The Lucid Airs are like, I would consider a Lucid before a Cybertruck. Just me personally. And then I think the Lucid's like top speed is like what, 180 or something crazy. Yeah, Lucids go up to, yeah, so if you get the Sapphire, the Lucid Air Sapphire, your top speed 205, 168. People keep saying like, why do you worry about top speed? But I actually like drive on the track, so that's why I care about top speed. But I understand if you know you don't take your cars to the track, then it's probably not worth it to you. So yeah, basically right now with this 5 minute forming like this, we just created another 5 minute IFEG. This trade setup is 100% invalidated. Very much likely we probably still will see a bounce, but it's not going to be the bounce that we're looking for. We're probably not even going to come take out buy side liquidity. The most I could really see this pushing up off of here is probably to this fair value gap range, and then back down we go. So great comment, Michael. And that's another big thing. If your setup kind of doesn't give you the entry, like if this was gonna work out, we would have had this entry here at 1004 once we got this wick down. Then we would have saw the expansion. But the fact is that price didn't wick down at 1004. Very much likely we can easily retest this range, maybe get a little bounce, but it's probably not coming to take out the relative equal highs just yet. Yes, sir. I love that. I love that. And keep asking questions, man. Like I tell a lot of traders, everything you've been through, I've been through. I've had to solve to get to where I am today. And with us forming this pretty much bearish candle here on the 10-minute time frame, probably gonna push straight through this, come back down and come take out daily sell side. And ES is actually a lot stronger than NQ right now. You see a lot of divergence between the two. So even if we do bounce off this equilibrium block, probably see a bounce, then create more divergence. Like you have the clear divergence. Maybe ES comes up, takes buy side again. NQ comes up, makes a lower high. And then we see more downside. But yeah, with SMCI, pretty much SMCI would have to hold up this 618, which is at 860. If it doesn't hold up 860, then yeah, we're going to see some more downside here and probably come take out these relative equal lows at 825. $10.25. Which time frame we looking at? 5 minute? Yes, sir. So we will be doing the YouTube live streams towards the end of the week. First half of the week, I'll be doing them in the community. Second half of the week, I'll be doing it on YouTube. Yes, sir. Exactly that. So pretty much, if we get this close over this 5 minute equilibrium block, we will get a change of state and delivery back bullish and probably see a push up. If we can't get a close over this high, we will see more downside pretty much off this rejection level. And then, yeah, probably push straight through here and then come take out daily sell side here. So yeah, looking here on the 5 minute time frame, we're currently getting this rejection. Sorry to go on and on, but I'm still in pain. I have to go on and play Elden Ring. Thing is, when I'm off the charts, I just feel like I'm wasting time and other. I mean, I hear you, boss man. I would just say go study the charts, if anything. Like, go back test. And then the biggest thing is, to be honest, video games are kind of just wasting your time. I'm sure there's something else that you probably enjoy in life that could actually benefit your trading. Um, I get it, have fun with your video games, but you could be studying the charts to where you'll actually be where you want to be trading wise. Andrew, I just sent you a message here on Discord. And notice how we're getting the rejection here off the 5 minute equilibrium block. So pretty much we are definitely going to go break through this 2 minute equilibrium block. And then if you come look, let's say the 1 minute time frame, this is kind of how I like to trade it with the equilibrium blocks. So if you look at the 5 minute, you see the rejection, and then you want to go down to the lower time frame. Is the lower time frame supporting it? So something that I have with like Tradeovate, for an example, I have the 3-second chart up. So with the 3-second, you can pretty much tell that price is gonna respect the equilibrium block a lot sooner than maybe the 5-minute. So that's something you also want to look for. And then, yeah, we also just took out this 1-minute buy side liquidity. Notice how we got the wick above it. So we grabbed enough liquidity. So very much like we see more downside here. Yeah, you would be looking to take out first. You'd want to take out the low here at low of the day. And then from there, you'd want to pretty much see the body close below low of the day to take out 904 here. That's the daily sell side liquidity. And then if you entered off the hourly candle, you would want to pretty much take this back down here. First and foremost, that'd be your first PT. So let's just say you did take this off the hourly equilibrium block. There's a couple of different ways you can enter on equilibrium blocks, and it kind of depends on if you're supporting with the lower price action. So like for this example, well, shit, we have a lot of relative equal highs right now. We just created more relative equal highs here on the 10-minute time frame. But if you see like lower time frame starts to support price action, you ultimately don't have to put your stop loss all the way up here, because I know 49 points on futures, that's a good chunk. That's a pretty big stop loss. And then here you take this back down, 3.43 risk to reward trade. The biggest thing is you'd want to see the hourly start to support more bearish price action. So like here on the hourly time frame, we have this volume imbalance that's been supported for since the 14th. Notice how every single time we test this VI, we never get a body close, never get a body close, never get a body close. So now based on the hourly time frame, you would want to see that body close. And once we get that body close, that's going to signal 904, here we come. Good trade, good trade. 2-minute equilibrium block for 29 points. Get your mind off your loss. I hear you. I hear you. There's no problem with that. And then also journal your trades, brother. Journal your trades. See what went wrong, what went right, or shit. I'll even journal it with you real quick. I do have to hop off of here within the next like 5-10 minutes. So what trade did you take, boss? Boss Cabini? I'll show you exactly how I journal all my trades. All I need is the exact entry time and the exact time you exited the trade. So far, still respecting the bearish equilibrium block. We got our close. Now we're seeing the push back down. See, when I left to Thailand, ended up getting rid of it. And the main reason why is because I'm gonna go get a 9, I said a 9. Not a 911, Cayman. Personally, I like the Caymans, and honestly, I feel like the Corvette's kind of big. What are the two big candles on the right? So this one is your hourly power of 3. This is your daily power of 3. So pretty much what you want to be doing is trading the trend. So if you see this candle is red, trade the downside. If you see this candle is green, trade the upside. You don't want to be fighting trend. Like, you pretty much have a higher probability setup by just waiting for the trend to form. Or set up to form that's with the daily candle. So a good example, let's just say we can go back to right here. Hourly candles red, daily candles red. What do you see formed? You formed this 5-minute IFEG. So what's more likely to play out? Because this daily candle's red and the hourly candle's red, more than likely you're going to see downside. So instead of trying to fight the trend and buy the dip, that'd be pointless. Just wait for a setup to form, and then take this back down with the trend. You had your 5-minute IFEG. It gave you the entry model right here on the next candle, and then back down you go. Okay, so you went short on gold. So let's go look at this. Keep 2 a.m. What's today? The 21st. Yep. 2 a.m. 2 a.m. 2 a.m. I mean, it looks like it was a winning trade. It took out sell side as well. So looking at gold, you ended up taking out buy side liquidity. If we come to the 5-minute, you'll probably have a much cleaner change of state and delivery here. Yes, you do. You can look at the 5-minute, or you can even look at the 10-minute. Yeah, I'm looking at it, boss man. It definitely looks like it was greed. All right, cool. So you had your fair value gap in this range. Ultimately, price didn't support it. What did price do? Gave you your retest here as well. So yeah, you got a good trade. The biggest thing is kind of looks like greed got the best of you. Um, like honestly, all I look for is a 2-to-1. You give me a 2-to-1, I'm taking that trade. I don't care for a 7 risk to reward, none of that. Give me a 2-to-1. That's all I want. And looking here, if you did take it out at sell side liquidity and you had your stop loss at the most recent high after we took liquidity here, let's say you did you use your entry model off this IFEG, or let's just say you even use your entry model off this equilibrium block. Either or, both of them kind of gave you almost a 2-to-1 risk to reward trade setup. Much better car than it came in for a similar price. Ah, okay. See, that's something I've noticed. Like the Caymans do lose a lot of value, like pretty damn fast too. Cause you could buy a Cayman, what? Buy a Cayman brand new, 90,000, and then shit, 4 years later, it's worth 45, 50. So we are getting the change of state and delivery here on the 5-minute time frame. Buyers are starting to step in. Yes, sir. As long as it's a 2-to-1, it's worth it. Like, and even if it's a little bit amount, like a good example with the long we took to take out these relative equal highs here, it was a 3R trade, and we just ended up taking 2 contracts, made $600 in a matter of like a 2-minute candle, and called it a day. Let me look at that. The 911 Carrera, is that the one with like the hatchback that has like the glass on the back of it? Oh, it's not. Oh, this is actually really nice. Oh shoot. Okay. Is this still a V4? Oh, it's a V6. Okay, thank you for the heads up. Wow. Yeah, I definitely will probably take out the back seats and go ahead and put in a cage in the back, because honestly, there's no point of having back seats in a car like a Porsche. Yeah, the biggest thing I wanted was really like a 911, but even with the 911s, I kind of really just want to get a GT3. And I personally am not gonna wait till Porsche decides to finally let you get a GT3 after you spend what 1.5 million with them. Just doesn't make sense. Then also buying a GT3 aftermarket doesn't make sense either. Okay, this is really nice. Thank you, Andrew. Oh my. All right, we're about to go take a look at that later today if I got some free time. How many miles is on this? 30,000 miles. Yeah, and that's another thing with like the Corvette, to be honest. After you use it, that thing kind of loses value pretty aggressively. I've seen some Corvettes you buy it what 92,000. Shit, they have like 30,000 miles and now they're going for 36. You know I live in Atlanta, right? I would not bust that drive. I can't even bust a drive to South Carolina that's 2 hours away. Okay, let me see. Yeah, because one that's near me right now, they really hold up their value. 2000, holy crap, this man drove the hell out of that car. Lost 50K in 2 months? Sheesh. Oh my. Yeah, that's just not worth it. Yeah, then all the GT3s that I see, they're all like old as hell, like 2015. Yeah, if you get a 2015 GT3, then you can get it for under 200,000, but besides that, nah, it's not really worth it. You're gonna get the GT3 brand new? All right, we got a setup. Honestly, gonna take this on options, take this long and kind of forget about it. QQQ. 482 calls. We'd have to go take out these other relative equal highs for this to be worth it. Let me see Qs. We get the push up. We get the push up. Go make a high. Daily candle has absolutely no wick. I like it. If this thing gives me an entry, um, getting the retest here. I don't live in a condition or live in a place where conductive to sports cars, pickup and Land Cruisers are the deal here. I feel that. I mean, even in Atlanta, to be honest, the roads aren't the nicest. Not really worth it. But I plan to move to Miami next month, so I feel like it's a lot better there to have a sports car. Makes more sense. You got a Tundra? Okay, okay. I live in the Virgin Islands, drive 97 Jeep Wrangler, and I love it. I feel that, brother. How long you been living in the Virgin Islands? Yeah, especially living on an island, I just don't think it's even worth it to have a sports car. But do you live in St. John's? Yeah, I'm looking to take some options here. Kind of done with futures. We made our money. Honestly, let me go look at the lower time frames here. Oh, we got people all over the world. I mean, Kenya, 4x4 and motorcycles are the only way around here. See, I feel that when I was in Thailand, I literally I was about to buy a motorcycle. So next time, whenever I go back, pretty much I probably will just get a nice motorcycle. What was it? The CR. What was it? CR something? CR7, I think, or something like that. The Honda motorcycle. Looking at a 450 or something. Oh, yeah, CR500. Is it a CR? All right, cool. We're about to end up taking some longs here. I've seen Ferraris down here, then they disappear when the owner realized he fucked up. I bet. Did you say a 10RR? What is that? I'm looking more for stuff for like a sports bikes. Let me see. Ah. Oh, this is nice. This is actually really nice. The Kawasaki, okay. Gotta make sure that's even available out there. Cause the biggest thing in Thailand is like, pretty much if you're not on a motorcycle, you will be in traffic for literally 2 hours to go for a destination that's maybe 2 miles away and just be sitting in traffic all day long. How was Bali? I hear that, Jay. I hear you. All right, so we're getting a new equilibrium block that's about to form here on the 5 minute candle. So pretty much somebody asked the question earlier, how do equilibrium blocks form? Exactly like this. You get your expansion, you get your retracement, you get your expansion again. The one retracement candle forms your equilibrium block. So if you look at this on the 1 minute time frame, then look at it on the 5 minute time frame, there's your equilibrium block. We got our change of state and delivery once we closed over 19,964, and now we're getting our expansion back up. We took out the lower time frame relative equal highs. We kind of need to see displacement past these, no ifs, ands, or buts. We see displacement past these highs, we're coming back up to the relative equal highs at 20,086, which is high of the day, and that will put QQQ back over 480, what? 482? Yeah. Now end up creating the daily wick because QQQ right now also has no daily wick. So if you look at the Qs, look at the daily candle. Is it? Well, sometimes you might not see a 3 bar, but essentially, yes and no, because you could just see a 3 bar without actually seeing the down close candle. So considering this is a bullish equilibrium block, notice how we have the one down close candle, and then you got your 3 bar. There's other examples, many other examples where it kind of doesn't form a 3 bar whatsoever. So what was this off of? I think this was off the 10 minute yesterday, the one at close. Okay, here's a good example. So if you look here at the top screen, I'll expand this one. Notice how this doesn't form a 3 bar, right? And then you could even use this one, this other example as well. So notice right here, you have your down close series of down close candle, your single up close candle, followed by the down close candles. We don't ultimately end up creating a 3 bar here. I guess you just get your 2 down candle and then you get your continuation back down. This example does create a 3 bar candle. This example does not create a 3 bar candle, but it also gives you your retest as well. Here's a very tiny one. Pulls back into your change of state and delivery equilibrium block. Gives you the retest of the IFEG, so you have all of those different confluences there, but you don't get your 3 bar candle. You kind of just get your retest and then expansion back down. 1,000 Suzuki. Does the strat work on gold? Okay, me personally, I tried trading the strat August 2022, or not August, February 2022. Realized the strat has the worst entries known to man, to where it was like, cool, I will not be trading the strat anymore. I get it, yeah, you know, hold through the storm, but what's the point of holding through the storm when you can just work on your entries? For me, equilibrium blocks and IFVGs. Andrew, I will give you a call here in about the next 15 minutes. But yeah, IFVGs and equilibrium blocks by far. And the main reason for equilibrium blocks for me personally is because even if you're wrong, you're gonna get an entry. Like the equilibrium block will give you a retest entry. So like, let's say you were biased long here, right? Just because price did kind of support bullish price action on the lower time frames, price will give you an entry here, even if you're wrong. So it's like, guess what? You lost money here because it didn't hold. Cool, that's perfectly fine. You got stopped out. But once you see this body close, price will give you an entry. I can show you hundreds of examples of that where price will give you an entry if you get stopped out. I do use SMT, kind of more so recently than anything, just because I've seen the importance in it. And then it also gives you a much higher setup, higher quality setup. So what trade did I take? Where's my journal? What day was this? There was SMT at 9:30 on NQ. Oh, there you go. The 19th, Juneteenth day, right? So if you come here, look at Juneteenth. What was that? The 19th. Where is this? So look at 9:30 out the. Or that's 8:30. Where's this? Here we go. Actually, let me go to this chart so I can show you a lot better. All right. So if you come back here to 9:30 out the gate on the 19th here, and that's granted if you even traded the 19th. Personally, I don't think it was worth it, but there were some setups. There were. All right. So if you look at ES, notice you have these relative equal highs, and then we don't take the highs on ES. Now, if you come back here on NQ, go to 2-minute time frame as well. It's gold. All right. So here we go. So if you want to look for like a cleaner A plus setup and like truly know where price is going, notice the divergence between the two. 9:30 out the gate, what happened? NQ took the high. ES made relative equal highs, right? So a lot of times, I know a lot of traders, including myself as well, anytime you see relative equal highs, you're kind of hesitant to take a short just because you understand that relative equal highs are like a magnet to price. So if you see the divergence between the two, you can pretty much discredit that relative equal highs and understand that, hey, price is coming down to find some form of sell side liquidity just because you had the SMT divergence. I mean, does your strat? Oh, does your strat? I thought you said does strat. Yeah. I mean, essentially, it's pretty much the smart money concepts. That's kind of what I utilize, and I kind of keep it very, very simple. Sure, we can go look at USD to JPY. This was like the one forex trade, and why I even got into it. I took this. I seen it was like literally using retail trading concepts. Took this up to 140, 149. And I pretty much seen it when we bottomed out here 2023. Literally seen this trend line breakout, and I was like, here, we're gonna get this move back up to this high pretty much. And that was like my one forex trade. And then I kinda blew a good chunk of my account on forex, kind of over leveraging. So KOT forex at the time, they had a 10,000 or not 1,000 leverage. So pretty much for every dollar you got, you get up to $1,000 of leverage. So I would never suggest anybody do that, to be honest, but I ended up taking a trade off of that, kind of over leveraging it, and then ended up turning my forex account from about, it was like 18K and ended up going down to 4K, and I was like, yeah, I'm gonna call it quits on forex and just kind of focus up on futures. And then another thing, what I don't like about forex as well is the fact is that if you look at one chart, so this chart right here on, I don't know what exchange this is, FXCM, and then if you look at another chart on Owanda, for an example, they're kind of two different charts. They're not the same exact chart. So if you're somebody that kind of does trade smart money concepts and things of that nature, and you kind of look for like precision within your trading, you're going to be trading two completely different charts. depending on what broker you're using. So that's the main reason why I don't like Forex. Yes, sir. I mean, the thing is with the equilibrium blocks, I love them mainly because it keeps you with the trend. So no matter what happens, you kind of know where trend is going. Um, you don't really have to force anything within your trade setups. And then right now we're getting this rejection here of this equilibrium block on a 10-minute time frame, which likely is going to signal a pullback down here. Could even give us the retest of this IFVG before we see more expansion to the upside. Yes, sir. Andrew, you have a great weekend as well. So let's just go find a setup here. Here goes a great setup. Here you go. Daily time frame. Good setup. Notice how you have your daily equilibrium block here. Crazy coincidence. Look where we reject. Crazy coincidence? Not at all. Look where we reject here. But you have to understand that, hey, trend is so bullish to the point to where you wouldn't want to be kind of taking this short, kind of what we talked about earlier. You'd want to be focusing on where's a long opportunity. Well, here's your long opportunity, right? Equilibrium block. What happens here on the June 12th? Most traders are like, oh my, it's time to short USD to JPY, right? No, no, it's not time to short. That's actually your dip opportunity. Came back to the daily equilibrium block, and now look where price is headed. We're coming out to take out what, all-time highs? Yeah, we're coming out to take out all-time highs here. I just moved to Canada. What broker would you recommend for futures or options? So with futures, I would recommend Tradeovate. And with options, I don't know if you guys have Charles Schwab in Canada. If you do, I would recommend that. They did fix Thinkorswim. Whenever Thinkorswim was down, what, a week ago, I've noticed like my Thinkorswim has actually been running a lot more effective, kind of like how it used to with TD Ameritrade. So I would recommend actually using Charles Schwab. Um, or I know a lot of people that trade in Canada use IBKR. And then also with IBKR, you kind of have a lot more benefits trading on IBKR just because I I don't know how accurate it is or how true it is. But I've heard you can sell option contracts early. So like let's say you swung SPX and the market opened up 4 o'clock. You could trim your SPX calls early. That's kind of gonna come down to your trading style more than anything. Um, so I started off with common stocks and then transitioned into options. I love options, but options is really more so beneficial if you actually have a large portfolio. Like just being 100% honest, if you're trading with like $1,000 portfolio, options isn't really worth it. I would honestly say probably learn to trade futures because let's just say you took a good entry, you took like a really sniper entry on futures, right? Or you just traded yesterday. Well, if you took one contract on options here, just a single, or not options, on futures, you made like $4,000 off of one contract. Versus on an options portfolio, if you're not trading SPX and if you only got like $5,000 and you're trading SPX, you're probably neglecting risk management, just being honest. Versus you can actually trade with, $5,000 on futures and make $5,000 on one single trade. So if you have a large portfolio, I'd recommend options. But if you don't have a large portfolio, options isn't really worth it to grow your account. If anything, I'd say kind of just fund a futures account and then transfer some profits until you actually have like at least, I'd say 25, 30K on options. Then options become worth it. Because the biggest thing with options is like you will probably, I've seen this too many times, is traders will literally, shit, I'll call out like 100% trade And I have no problem trimming 100% trade because I just put $4,000 in that trade. So it's like, cool, I just made 4,000. But if you don't have $4,000 in the trade, and let's say you only bought one contract of the trade that I alerted, then chances are you maybe made, I don't know, $100, $200, and then you're looking at that $200 and you're like, I'm not gonna trim that. It's gonna keep going. And then guess what happens? It doesn't keep going. And then you give back all your profits. Yep, no problem, brother. I am gonna call it a day. Great day today. Very simple day. Looking at the market right now, 10-minute respect to the IFEG, we are getting this expansion back up. We did get the body close. We're kind of struggling. We'll see within the next 5 minutes. But ultimately, we need to see this body close over here, give us the full market structure shift. And then we will see the expansion back up to midnight open. And then from midnight open, pretty much look to take out these relative equal highs and flip the daily back green as well. So pretty much as long as price holds up this IFEG, we're going to see some upside here. But also keep in mind it is quad witching, so volume is probably going to die down pretty soon here if it's not dead already. And many times when there is quad witching, price does like to trade a little bit weird. And what I mean by that, like it'll come like, for this example, it literally went 1 point away from hitting buy side liquidity and then came all the way back down, took sell side first, and then you got your expansion back up. Anybody have any other last minute questions before I head off here? What do you mean by no market is safe? Once you have the skill set, all markets are safe. It doesn't matter what you're trading. You just got to focus on mastering the skill set. That's the biggest thing. Focus on the process of trading. Like, I can't stress that enough. The process, the process, the process. The money only comes once you focus on the process. And to a certain extent, I feel like 99% of traders actually know the process because, like, once the trade setup actually happens, or you look at it and it's like, wow, you hit PT, but you didn't trim. Well, whose fault is that to blame? Yep, exactly that. It really doesn't matter what market. I mean, you can literally use your edge, our edge, with the bond market if you really wanted to. You can use it on commodities. You could use it on futures. You could use it on options. Yes, sir, boss man. You got this. And then another thing, just kind of work on not tilting. Um, and the biggest thing why traders tilt, like back in the day when I used to tilt, it was because shit, I knew my edge was effective, but I wanted to control the markets. But at the end of the day, you kind of got to realize, hey, there's no amount of money you can put in this world unless you literally have a hedge fund that can move the market. Or actually, there's no money that you can have in the world as a retail trader to move this market. Just being honest. Yes, sir. Pretty easy day. Pretty easy day. And right now, what I mean with the market kind of slowing down, notice how price action is supporting bullish price action and bearish and bullish and bearish on the lower time frames. So I will definitely be done for the day. If we kind of get a bigger pullback, QQQ calls will be worth it. Some 482 calls. But besides that, pretty much done. You guys have a great rest of your weekend, and I'll see you guys on Monday.